Hey guys, how you doing? It's Alessio Rastani of LeadingTrader. Today I'm speaking for Core Finance and give you this update on the S&P. I want to talk to you about the stock markets, and I've mentioned this now in some of our own videos, but I want to mention this in this particular video, something quite important. As you probably noticed, the stock markets have had a massive plunge. Let's take a look at the chart. This is the S&P 500. We've seen across the board in the Dow and the S&P, in the UK FTSE, the German DAX, we've seen this huge volatility and this drop from October, the October peak, all the way down to that recent bottom or that recent low that we formed there. I don't want to say bottom, but that recent low. And again, folks right now, if you've been paying attention to what's happening right now on all these newsletters and these YouTube videos out there, everybody's panicking. Oh my God, the end is coming. We're heading towards a bear market in the stock markets. And I don't know if you've noticed this, but just in the last few days of this week, I've seen an increase in the number of articles and videos that have the words major crash or bear market in them. You probably noticed that too. And that's actually about the time when we should be very bullish. Here's the thing, guys. I am bullish on the stock market. I'm a contrarian, and I remain bullish on the stock market unless the market tells us something different. And at the moment, there is nothing different that we're seeing. Look, here's the thing, guys. What happens around this time of year, October, in fact, September, October? We see a lot of volatility. Statistics show that this period, in the October period, is the most volatile on record. So it's not surprising we're seeing a lot of volatility in October. This happens on an actual annual basis. Around this time of year, September, October, we see this plunge and this drop in the markets, in the stock markets, and everybody starts panicking. And what happens? When everyone is calling for a major bear market, when they think the sky is going to fall on us, the exact opposite happens, and we see the markets rally. This is called the Halloween effect. This is a pattern that's been observed for 300 years. Why 300 years? There was a study done in 2010 by a couple of researchers and statisticians. They found that this pattern has been observed not just in the US markets, but in the European markets, in the Middle East. It goes back 300 years, in fact, that around the end of October, there is this bullish period. There is this reversal pattern, and the markets rally from the end of October to December and onwards. It's also called sell in May and go away, but essentially what we prefer to call it the Halloween effect. So bottom line is the Halloween effect simply means that at the end of October, towards the end of October, we see strength in the markets, which leads to the December, and of course the Christmas rally, the Santa Claus rally and all that. Bottom line is this, guys. If we just go back to the second image I want to show you, a lot of people are saying, well, aren't we already in a bear market? No, we're not in a bear market. The mainstream media keeps telling us that a 20% drop is equal to a bear market. Wrong. In fact, according to statistics gathered by Jack Shanap of the Dow Theory, he made a very compelling case, very compelling and convincing case that actually a 16% drop in the stock markets, especially the S&P, is what really is the correct definition of a bear market. So it's a 16%, not a 20%, but a 16% drop in the market that tells us we're heading towards a bear market. Has there been a 16% drop in the markets? No, there hasn't, no. But here's the thing. Jack Shanap also found some other interesting things as well. So what that chart showed us was that whenever there's a 16% drop in the markets, about 80% of the time, that results in a 24% drop in the markets. And also, the Dow Theory, Jack Shanap found that 73% of the time, there's been a 16% drop in the market that's followed by a recession. So guys, bottom line is this. If you want to know when a recession is going to start, then the major clue is going to be if there's a 16% correction or drop in the markets, because that leads a high probability we might be heading for a recession. And also, by the way, the research found that the most common drop for the markets in a bear market is about 34%. So the statistics and the research shows that the average bear market has lasted for about a year and about a 34% drop in the markets. So that's something important to remember. If we just go back to the first chart, I just want to finish with this. The first chart showed us that, look, I don't see a reason at all to be bearish. I think right now is a time to start looking for potential reversal signals, buy signals. And yes, guys, I'm bullish. I'm looking for a potential reversal signal. I don't necessarily see a sign of a bottom yet, but bottom line is this, guys, that I think we should be right now at a time when we should be looking for a potential reversal signal, some kind of bullish signal, and therefore I am bullish on the stock markets. I actually think that by December 31st or by the beginning of January, we're gonna probably test 3,000 on the S&P. So for me, this is actually a long, this drop here is going to be a long opportunity, not something to be scared of. So guys, before I finish this video, I just want to say, if you like this video, please give it a thumbs up, and also please subscribe to this channel for future updates and videos. I really appreciate that. Thanks very much indeed. Bye for now.